Hi.
everyone.
Hi,
Hi.
Vaishali. Hi, Gaurav.
Yeah,
Hi.
hi Vaishali, hi Rajesh. This is Gaurav.
Hi. Okay, so this is like another session of Fireside Chat with M2P, and today we have with us Mr. Gaurav Goel from Yes Bank. He is the India head of the e-commerce and new economy business at Yes Bank. Okay. He has decades of experience in the banking industry, and he has worked with banks like Exim Bank, SBI, and Yes Bank.
Thanks
Thank
Vaishali for the introduction. Nice introduction.
On the other side, we have Mr. Rajesh Wadhwa. He's the CBO at M2P, and we will just have a session with these two together. Let's hope we have a wholesome session together. Thank you.
Thanks, Vaishali. Thanks so much. Gaurav, it's a pleasure knowing you and pleasure meeting you. While we've been having a fairly deep engagement with your bank, but this is the first time we get to meet, and it's one of the premier banks in the fintech space. Very fintech friendly and agile bank, and interesting to know your perspective on the fintech space, on you know what we could do together and what is happening in the industry. There have
So
been
thanks Rajesh.
yeah, Gaurav.
Same here. Nice to meet you. And while our enterprises are working together on a lot of things, but good to meet you here. And sure, let's understand how things are moving on the fintech and neo banking side. And let's say happy to exchange notes on that.
Sure. So there have been a lot of action around the neobanking space outside of India. A lot of growth we are seeing in terms of number of customers, number of accounts, and innovation that players like Revolut, Solaris, and so many others are bringing to the table. We've seen a lot of excitement in India, and some of the neobanks in the region have started working. Some focused on consumers, some focused on SMEs, and some focused on specific segments like travel, etc. What is your perspective of neobanks? Where is it, heading? How do you think will be how will the growth pan out?
So right, very pertinent, Rajesh, and neobanks is coming up very fast, and in last 24 months, while the fintechs have grown, that's neobank I generally feel is the next step to the fintech, wherein while neobank is a completely digital bank, if we say, and if we while cross globally, a lot of development is happening on the neobanking side, and now the regulators are also allowing specific licenses for the neobanks, digital banks. However, India, since as of now, complete digital bank is not regulatory allowed. So in India, a lot of development is happening, wherein it's sort of an arrangement between a tech company and a regulated banking license holder bank, an incumbent bank. So a lot of collaboration is happening, wherein banks and these tech companies, which are fintechs, and are working together and bringing in best of both the sides. While banks have their regulatory strength, they have the licenses, they know understand the compliance part of it. While the tech companies bring in lot of efficiencies with these new technologies, which bring so it's a marriage of both the best part of both the sides. And coming to the point, so what we feel that there is a tremendous opportunity and growth in the neo banking space, which is expected, whether it is on the B2B side and on the B2C side. So B2B on the enterprise side, there is a specific need because our MSMEs and the merchants, uh, given the scheduled bank structures and the costing of the client acquisition, going to the tier 3 to tier 6 cities and that deep, it became a challenge. So that part, that neobanks are bringing in technology wherein the client acquisition is becoming cheap, and with this technology intervention, so what I feel in the both the segments, enterprises and on the retail, neobanks are here to stay and grow, because it takes care of the recent need of the user, the customer, because convenience is something which from the banking people look at convenience. So they are providing that. Now neobanks on the B2C side, which is the retail side, now our millennials are around 40-45% of our workforce, around 40% of our workforce, and they are looking for banking convenience in the banking. They don't want to spend long hours in the branches, or not even want to visit the branches. So this tech intervention, and with the apps, new banking apps are coming. So a whole of the banking has moved into a mobile phone. Now through mobile phone we can do a whole lot of stuff which is required in day-to-day banking, and so ultimately it is about convenience, and these apps are also loaded with features. So all that put together, it is a win-win for the technology companies, for the consumer, which is a retail consumer, and the scheduled banks also, because with that they are doing the client acquisition at a very low cost. So all the for the three participants, it's a win-win situation.
Perfect. That's true. That's very true. You spoke about the millennial workforce, and you spoke about also the cost of acquisition being cheaper, right? S That's very true that the millennials today don't want to, or rather, they don't have the time to and the intent to visit a branch, etc. And banking as a service becomes far more convenient with the neobanks. But do you think that with this new evolution, there is this loss of touch, loss of understanding of the customer? Because in the traditional world, the banker knows what kind of a customer he is, how much he can lend, what kind of business they can do with him, and how can they expand their book. From a bank's perspective, how do you look at it? When the neo banking customer, how do they create the profile in their mind? How do they ensure that they're able to service the customer, his interests, his needs? Because there's no physical touch and they don't really come there.
Yeah, Rajesh, again a very pertinent question, because generally we say banking is all about relationship. It's all about individual engagement with each other, and generally it is more about physical engagement, calling and talking to each other, than meeting and understanding the requirements and building the profile about the customer. And even the customer also develops a comfort with when they meet generally the branch manager, some official in the branches. Having said that, now since things are changing and banking somehow is not, it's becoming a embedded stuff. It's a requirement, but yeah, it's a service which people look at banking as a convenience. So now in earlier days in banking, we used to build the profile of a customer through engagement, understanding his social engagements, also social linkages as well, his net worth. So all these things we used to gather through our discussions. Now with the advancement in technology, you can build the complete profile of an individual digitally. You when the guy is making the individual is making payments through various payment apps using UPI, we get a digital footprint of that individual, his behavior also. Now through the civil search and all, you can get his credit history as well. So through these various checks, we can build the complete profile, the user profile, his credit behavior, his social behavior. Sometimes we gather digitally lot of information about an individual, and it helps in building the complete digital profile of an individual, his behavior, spending pattern, his credit pattern, and how in case there are any defaults in earlier in past, and all that is so that through the advancement of technology, while profile is not getting compromised, even the more features or more parameters are getting added in the profile of an individual, but everything is getting built digitally, and that is where our costs are getting reduced. Even the KYC, the regulator has allowed video KYC. So through that, the cost is further coming down. And acquisition, while no compromise on the due diligence and on the KYC parts, but through technology, it is further becoming more comprehensive, I would say.
That's very true. In fact, we are lucky to be present in this age here in this country because India is far more advanced in terms of technology. We have APIs for PAN verification, APIs for Aadhaar, APIs to do a CIBIL kind of verification. All of these are good, very good, and they enhance our banking technology compared to Europe and the US. And that's the reason why the neobanks are doing quite well in those regions, because they bring those convenience to the doorstep and into the mobile. Whereas in India, when these conveniences are already available, how do you think neobanks will be able to make money, and how do you think they'll be able to differentiate apart from just the service? And if they are going to serve at the doorstep, then there is a certain cost involved there, right? So how do you think they will be able to, grow, survive, make money?
True. So, see, again, as I was talking, banking is a service. Now, when our workforce, they are looking at banking to manage their wealth. They need somebody to guide them on investment opportunities. They need somebody to provide them multiple options how to manage the wealth. In case we talk about our workforce, now the question how the neobanks are going to make money, right? So there are a couple of models around it. One, in case you need convenience, you have to subscribe to a service, right? So banking is becoming a service. Banking as a service is a model which is picking up very fast. Now, when you subscribe to this, because when neobanks are providing you with a lot of features at one place, you can take care of your managing your wealth, your insurance, your everything is taken care on one place. Now it is, then you have to subscribe to that service, and from one piece they will neobanks will definitely make money. Now when they are building the complete credit profile, a complete profile of an individual, now easily they can plug in the credit, day-to-day credit. Now wherein the concept of embedded finance is coming in, wherein finance is getting embedded everywhere. So parallelly, banks are becoming invisible. Now, when you travel, take a Ola cab, you while your cab trip is finished, you have an option to make a payment through a credit, which is short-term credit, buy now, pay later type of concept is happening. No, ultimately there is a banking here, which is embedded. So but when a consumer facing app is bringing all these features on its app, there is definitely certain fees and certain revenue sharing models which will be happening at the back end. And those models, there will be multiple streams of revenue. If our insurance is getting booked on a neo banking app, definitely insurance company would be sharing certain piece of revenue with the neo banking bank uh, company. Being it's a client acquisition, they're providing the client, and the cost of client acquisition for an insurance company is getting reduced. Similarly, for a credit guy, they need not go for a uh, uh, searching a credit avenues when it is getting embedded in so much consumer facing apps. So as the cost of acquisition is coming down, I don't think the financial institutions find any challenge in sharing those revenues with the front-ending neobanks. So that is how the play is, wherein neobanks are facilitating the client acquisition and the multiplying the revenue streams for the banks and the financial institutions. They are also getting the share of the revenue. So this is how I feel they will make money in going forward.
Makes a lot of sense. Makes a lot of sense. You spoke about millennials, and you said 40% millennial workforce, and the way the concept of using, accessing banks on a mobile, right? Do you think the target market for a new bank is essentially the millennials, essentially the young crowd, or and this crowd, whether they have the kind of income, whether they will build in savings, etc., how will they make money out of them? Is a perspective they're thinking. Do you think they'll also be targeting the mature segment, the larger earning segment, and how do you think they'll be able to excite them, attract them to sign up for a new bank and to start banking here and move to the new channel, so to say?
Right. In case we are looking at a B2C neobanks, B2C neobanks are targeting millennials. They are targeting the high net worth individuals, maybe the working class between say for 30 to 50 segment also they are targeting, because while they are working and they have a disposable income, but they are not fully aware of the various avenues how they can manage their money at one place, while it is scattered in various insurance they have something, they have some fixed deposits with the bank, they have certain investment with the mutual fund mutual funds, they have certain alternate investment opportunities. Now the when what I understand, the your question is like how beyond millennials these neobanks, B2B retail banks will target, which target audience they should and they will be going about. So what I'm trying to highlight here is the workforce between 35 to 45, 50 is a workforce where they are having a disposable income, but they don't know how to manage it. It is so scattered. Now, when somebody is providing them everything at one place, again about convenience, they would be happy to even subscribe to that service. That's one stream of revenue for them, these guys. And then they are happy to have, since they are these services, whether it's insurance, whether it is wealth tech, investing opportunities, whether it's alternate investment opportunities now coming up very fast in the country, whether there are investment opportunities in the startups, everything when a platform is providing, with these all different avenues, there is a revenue streams attached, and these revenue streams are coming to these banks, and these target audience from 35 to 45, 50, where they have the disposable income, are very happy to pay certain piece of revenue or certain fee to get into that. So it's again a win-win because a lot of convenience and everything is coming at one place. So convenience is the underlying word for which this target audience of 35 to 50 would be attracted to new banks. So that would be
Brilliant.
another segment in the retail. But major money, which I feel, Rajesh, would be, or the gap is in enterprise, in B2B space, SMEs. We have a big gap in SMEs. One, banks are not able to penetrate that deep into the SME space, and that is where the further revolution, I would say, and there the disruption is required. Various studies have come in which highlight that the credit gap is between 225 to 275 billion dollars in this country on the SME credit. And it's very difficult to assess the credit profile of these companies. You can't just understand through the balance sheet analysis how to fund these companies. You have to have various other parameters which are intangible as well, apart from tangible collaterals these guys have. So because SMEs don't have that type of collaterals, and that is the reason sometimes they are not able to get the funds in time. And so B2B neobanks is something which would be more active, and that's a space which I feel in next 24 months we'll see lot and lot of action. And when I'm talking about B2B space and say MSMEs, I am talking about even cross-border remittances, cross-border payments. But that's another area which is I feel is untapped, and a lot of neobanks from outside the country are coming in and trying to tap that area, wherein it helps MSMEs also to manage their cash very well, and it creates another investment avenue for HNIs also, because it's a receivable financing, export receivable financing could be done, which is in very nascent stage in this country, and it has not reached to our MSMEs and the small guys, small businesses. So that is one
So that
area I feel to much better B2B space.
100%
Yeah.
agreed. In fact, that leads me to the next question. You spoke about cross-border payments, and MSMEs need to access capital from outside or from within India, and also their potential opportunity to export and get money in, or if they are importing something. So, cross-border payments is one rising area for banking, and more specifically for neo banking. What, according to you, is the state in the region? We heard about Revolut and a few others wanting to set up shop in India, looking for a license, looking for partnerships, etc. And all of them are looking at the same target market of cross-border payments. What, according to you, is the landscape for cross-border payments today, and how do you think that's going to take shape or grow?
So again, yes. So cross-border is something which involves, a buyer sitting outside the country, a seller here, or vice versa. So lot of trust deficit generally exists, and that's the one area where these MSMEs, while they are major producer of the export goods, but they are always short of working capital or the capital required. So in case while Rajesh, I can't, I would say there is a big opportunity, but as of now, documents and all the process has to be streamlined. Because no one area I would one challenge generally I see with the recent payment aggregator guidelines. If some neobank from outside comes and start taking care of the cross-border remittances, with the payment aggregator guidelines, either they have to bank on certain Indian payment aggregator because of escrow guidelines, or they have to take a approval from RBI to handle the third party funds, because these are again the third party funds and they are managing it. They are the facilitator. So that is one challenge I feel in the cross border remittances, how that is going to be sorted out. This is the now the guidelines are extended till September, but some long term solution has to be found. Either these guys have to bank on a payment aggregators who are compliant in India, or they have to go to RBI for the approvals to do those cross-border third-party remittances. So that's one area which I think regulatory riddle, which we see some light down the line in next 3 to 6 months. However, opportunities are huge, and a lot of I generally see the neobanks from outside Europe and US are getting into this country, and they feel this is one niche area where they can do something, do well. And technology is required, disruption through technology is required in this particular area. But having said that, we need to see certain concrete action in this particular niche segment. While B2B within the country, a lot of action is happening, and that's the area which is getting catered to. In last 18 months, I've seen a lot of movement towards B2B space, wherein neobanks have understand that there is a credit gap. There is a lot of these small guys, small MSMEs are not able to have their own accounting software, invoicing software, receivable management software. So that is where the banking as a service would play a critical role, and that cost of having all these facilities or the technology features would be shared, and the neobanks in this space would play a very very critical role, and that I could see happening, and it will be further accelerated in next 24 months. However, on the cross-border side, while the concept is good, few regulatory and certain action on the ground we need to see in India. But
Brilliant
again,
thought. Yeah, yeah, brilliant thought. What we've seen, and you're right in that the MSMEs don't have access to, or at not at the right cost, latest technology in terms of expense management, or the setting up the software, etc., or the accounting software. From our experience, we've seen that there are players in expense management who have also bundled neo banking, and that's how they become a neo bank. Or there are players who help enable set up the enterprise, give them the accounting software, and have bundled the neo banking, and have morphed into a complete neo bank. From your perspective, when they're starting off, while these are add-ons, they need to establish their brand, right? So many of them would love to work with a large bank, because the large bank comes with a established setup. They understand the regulation, and they have branches everywhere, and they are more present, and there is a psychological value attached to the existing large brand. So, but it also comes with size, and to that extent delays and approvals, etc. According to you, what do you think, the neo banks would be more comfortable dealing with larger banks, stand on their shoulder, and build their enterprise, or would love to work with a smaller fintech friendly agile bank, so to say? What is your view?
so yes, Rajesh. Again, interesting one. Nobody can build a business on other shoulder. So and big banks also feel that, yeah, why somewhere in banking industry, when neobanks are coming in, while mid-size and small banks understand that we have to collaborate. That's the only way going forward, and that's a beautiful way going forward, because it's a win-win for both of them. Smaller banks get the reach, and the cost of acquisition drastically come down because of the technology intervention which the neobanks are bringing in. While for neobanks, since they need a regulatory license, they can ride on the regulatory license, whether it comes from a big bank or a smaller bank, it doesn't matter. Coming to the reach, you're right. While somewhere there is certain impact of the reach, but actually this is where the neobanks play on. They don't have a physical presence, but through the technology they are trying to reach. And uh, small banks sometimes they prefer, reason being small and mid-sized bank being agile, and they are more flexible, and they also understand they are not to gain up from this, because their client base, client acquisition grow exponentially with these type of alliances. And uh, and and while the neobanks gain on the, they get a banking license support, and with this agility, their scope of work and the pace, they can match the pace, I would say, with a smaller and mid-sized bank. There's a win-win for both of them. Coming to the bigger banks, yeah, definitely there are certain advantages with the bigger banks, but bigger banks also have their own challenges as well. There is always good to have them with you, but sometime they may not be able to accommodate every new bank. Many of the new banks are at very nascent stage, very early stage, and they may not get that type of support. But yeah, it depends. But generally, I feel it doesn't matter as long as technology intervention is happening, and there's a win-win created for both the sides, which I feel. And whether it's a smaller bank or a bigger bank, for new banks, it's a banking license and regulatory and compliance, which is important, which everybody has to take care on the incumbent banks.
True, true. Very, very well put. You spoke about reach, and we know that telcos have a very good reach, right? They're kind of present in all the states, all the cities, all the up to the taluk level. They have their sales agents, they have their shops, etc. And that was the perspective why even the regulators thought it makes sense to launch something like a payment bank, and that's how quite a few payment banks started off, got approvals, because they were looking at riding on the reach of the telco, the reach of similar large retail, present firms. You think that going forward, payment banks would kind of compete with these neobanks, or neobanks would, eat their space, or kind of earn out their market share from the payment banks, or some of them would potentially morph into a neobank, etc. How do you see them coexisting and growing?
So yes, that's again very very interesting question. And recent regulatory changes, which has regulator has come out, wherein they have uh, increased the limit of the wallets, digital wallets, from 1 lakh to 2 lakh, allowing interoperability of the wallets. Then cash withdrawal from the wallets which are issued by the third party. So, and then overnight balances in the digital bank, sorry, this payment bank account from 1 lakh to 2 lakh. So few things which regulator has done. What they are doing, they are trying to broad base and reduce the load on the payment systems of the existing banks. Now they are making other instruments more and more relevant, because a lot of UPI transactions, while this is helping our digital drive, but somewhere our generally the bank's architecture are not defined for such a huge number of transactions. So even regulator understand that, what I feel, and that is the reason they are making other components of the payment wallets. They are making more use cases are emerging for the wallets, with the interoperability limits going up, cash withdrawal allowed for the allowing for from the third party wallet. And the fourth important step which regulator has taken, and which shows the confidence of the regulator on the fintech and the tech companies, is allowing them to become the member of the settlement. Directly they can do settlements for the RTGS and NEFT with the central bank. Now this again further reduce the loads on the banks, and that was the challenge which banks even was facing. So now coming to your exact point, yes, with these few changes, the wallet is basically become a quasi saving account. And with these telcos, with the payment banks adding some fintech part to it, they are sort of a new bank. They can offer full lot of services what neobanks are offering, because now these wallets have literally becoming a saving account. Now neobanks play on the saving accounts of an individual. Now once these wallets are becoming so powerful, and they are so many use cases emerging for these wallets, so definitely you are right, there would be very interesting to see how the things go with the payment banks and the neobanks. Banks will definitely, I feel, will get into the space of neobanks. But again, having said that, pie is so huge, there is a space for everybody. But very pertinent point, Rajesh, you have raised with these new regulations. It has infused life in the payment banks, and getting along with the digital wallets and everything, they will they may morph themselves into a neobank. But pie is huge. There is a space for everybody.
We'll have to wait and see.
Yeah,
So
true.
one more trend that we are seeing today, we work with quite a few large banks. Most of the large banks who kind of seen the growth in the fintech space, in the neo banking space, are now repurposing their existing digital assets to position that particular asset as a division, but separate at arm's length, kind of positioning it as a neobank, right? And going back to the young crowd, going back to the same target segment where neobanks are playing, to say that we too have a neobanking offering. Here is our digital asset. You can onboard yourself. You can open an account. You can start, like you said, start with the wallet and create a savings account, and going forward access more services. Large banks think, or rather they've come to a realization that they are kind of quickly losing the growing market to the new players. And if they don't repurpose their digital assets like a new bank, then potentially they could be left behind. What has been your experience in the various banks that you've seen, that you worked, or with the current bank? And what has been your experience? Do you get the same feeling in the market that you're seeing, and from other banking friends that you speak to?
Right. So, Rajesh, there are two very visible trends. One, every technology company is moving towards becoming a fintech because they have to monetize their base, their user base, and becoming a fintech, bring in credit plugin and all is the best, one of the important way to do monetize the user base. Now, when you are talking about the existing incumbent banks bringing in their own neo banks, you're right. There are two ways to it. One is you maintain your identity, like SBI has come out with Yono. It's a neo bank for SBI, wherein the fronting is done by SBI, and all the merchants, all the other facilities are like sort of plugging in there, hooking up. All the fintechs are coming and getting hooked up for the additional facilities. But SBI has maintained its front end that they will be fronting it. They have created a platform with a brand SBI. Now there is another thought around it, wherein banking is becoming as a service. Banks are becoming invisible. Now, if you remember, there is always on a laptop it is written Intel inside. While the laptop or our tech gadgets are powered by those Intel chips, and the chip is very critical. Similarly, what I feel, banking is going to become invisible while it is embedded everywhere, but it will not be that way visible, and banks somewhere need to write like Intel inside. They have to run those marketing campaigns. Having said that, so second form is when you become banking as a service, like Goldman has come out with Marcus as a platform, which just work with lot of consumer facing technology companies, like Amazon is there, or a Flipkart is there, or a Ola is there, wherein they have huge consumer base, and just plug in your banking services on those consumer base, and if you have a ready-made consumer base getting plugged onto your banking system as well. But you have to lose there, you lose your identity. So coming back to the point, there are two concepts here. One, you create a front end and all the merchants, all the fintechs come on your platform, or you get embedded in other platforms. So few banks are, so both the models are running in this country, like digibank of DBS, or say Yono of SBI, or 811. So those are the first category, first models, wherein the front identity of or the brand of the bank is visible, and all the services are getting plugged in. Second model would be where the front ending is done by Amazon, when consumer funding is happening on a, when we buy a mobile and we get an on the checkout page, we get an option of funding from various banks and the financial institutions. That's where the embedded finance come into play. While banks are getting sort of losing the identity, but yes, it's a win-win again, wherein they get the established user base with the credit profile, credit history, everything is there. So these two models are there, and I feel both the models will run together. Bigger banks, bigger institutions would have their own on platforms, while the mid-size and smaller banks would collaborate with the these user or say B2C technology platforms, and try to find their way of growth through that channel. So both the platforms would be there, and let's see how it progress. But both the things would be working.
Makes a lot of sense. I'll take you to a very different perspective. Let me draw an example from what happened in the voice telecom and the call center space. Right, long ago, Avaya was a leader in voice, and Avaya was leading the call center space. Whereas if you look at Cisco and Nortel, they were leaders in the networking space. And slowly Cisco moved towards voice. And if you look at a triangle, they added the voice capability and Avaya added the networking capability. Over a period of time, looking at balance sheet size, Avaya got acquired, right? We're seeing something similar where banks are adding, investment capabilities or investment advisory or wealth management, etc. What if, and I'm just looking at one example, let's take Zerodha, who are quite large, right? Potentially, they could add a banking layer, they could work with a partner, and they could convert from being purely an investment or a stock brokerage firm to a neobank who also does banking. Do you see this kind of a movement coming from the non-banking players towards banking, and over a period of time, somewhere one of them, gets acquired or merged?
True. Right. So that is what I was highlighting, that every technology companies is moving toward becoming a fintech. So Zerodha is a tech company on the mutual fund investment space and moving towards becoming a fintech and then eventually a neobank. And similarly, every bank needs a fintech embedded in themselves. So see, this will happen wherein the banks would try to acquire the capabilities and the efficiencies of the fintech, the best parts of the fintech. These banks will definitely try to acquire. Wherein the technology companies of Zerodhas and the Uber and Ola of the world would move towards the banking space, wherein banking becomes a BaaS, as a banking as a service, is offered on those platforms. So this movement is happening, and both the I would say tech fins and the banks and the fintechs are working towards that, and somewhere they both the streams have to merge. And you are right, there would be certain consolidation would happen, but it is down the line, you see, 24 to 36 months with what I feel, that these consolidations will start happening. Because as a next step, the first step, as I see, the regulator has shown confidence on the fintechs and the technology companies by allowing them to have a part, to become the part of the settlement system of the RBI, and couple of other things. I would see down the line, 24 to 36 months, lot of validations from regulators will happen towards fintechs and neobanks, and that is where even the incumbents will understand that collaboration is the only way forward. And so both the streams would merge eventually, maybe 24 36 months down the line. And a lot of consolidation and M&A activities will emerge in this space. But yes, survival of the fittest would happen.
That's true. We'll have to wait and see. So, one last question. I'll take you slightly away from neobanking. You spoke about the changes in the PPI regulation, and now even the PPIs kind of behave like a quasi bank, right? So they can, except for paying interest and all of that. So today, as we see, or from the kind of convenience that a PPI has, there's a possibility that most partners, like a fintech partner or even a neobank, would prefer to work with a PPI, considering lower costs, considering ease of integration, etc. How do you see this space panning out? I see more and more PPIs kind of competing with banks and taking away all the new fintech business to partner with PPIs. Do you see that's going to be the trend? Do you see a risk to the fintech friendly banks and their potential business out of fintechs?
So, while yes, you are right, because of again the recent guidelines, that scenario is emerging, and there is a high probability that these PPIs and the fintechs would collaborate and create a sort of a new bank again. So there would be there, that will again create multiple players. But having said that, generally I feel there is a lot of space, untapped market, whether it is on the retail or the individual or B2C side or on the B2B side. Collaborations will generally help the consumer and ultimately solve the cause of financial inclusion, which our regulators look at. While all these collaborations on the PPI and fintech side If they collaborate, again, good for the consumer. Their reach, they will reach out to tier 3 to tier 6 cities, and ultimately help the cause of financial inclusion. And that is where the purpose is. All these new changes in our regulations, everything is coming to create further financial inclusion. Definitely, again, in short term, a lot of new players will come up, a lot of permutations and combinations will happen, but ultimately what I feel, it is helping the cause of financial inclusion and increasing a reach, and banking as a service reaching out to the lower part of our pyramid. That is, and that's the purpose of all this, bringing in technology and regulator, bringing in a lot of changes in the regulations, and ultimately those agendas would be catered to. But yes, these collaborations will happen, and multiple players will come into the market, and they players will compete with each other for a certain pie. But as I said, pie is huge, so it will take care of the requirements of everybody.
And is
For many,
expanding also.
and again, it's expanding.
So in summary, there are going to be more players. There are going to be more fintech players moving towards banking, and more banking players moving towards the fintech world, enabling a neobank kind of a setup within the bank to attract and address the financial inclusion needs, to address the millennial needs. And as you see, it's going to be more of cooperation or coexistence, and potentially in the longer term there could be some consolidation and survival of the fittest.
True. That, you summarized it well, Rajesh. This is how it is, and this is how we feel it will pan out. But technology is always a disruptor, and let's see how it moves. But next 24 to 36 months are really interesting for this country, on the digital, on the payment side, on the new banks and the fintech side. Very interesting space to watch.
And you also feel that like technology is commoditized, kind of banking also will become like a ready to feed in service, like a commodity service, and it depends on how it's packaged.
Yes, you're right. So when I say BaaS, banking as a service, it is becoming a commodity. And when you say how it is packaged, this is where the neobanks come in. Banking is becoming a commodity and sort of. Now, how it is packaged, what type of analytics are added to it, what type of solutions are added to it on its packaging, and what type of UI again also, how much convenient it is to navigate on through the platforms, that all will matter. But ultimately, yes, you're right. Banking as a service is getting commoditized, and it's all about the value-added stuff which neobanks and even the incumbent banks bring on their platforms, which will matter and which will differentiate.
Done, sir. It's been a great session, and there's a lot of learning personally for me. Vaishali.
Yeah, hi. Thank you.
Rajesh.
It was a very good session. I was listening to all the questions, and it was like a wholesome kind of discussion, and a lot of questions that we had in our minds as a fintech, right? When we think about like smaller bank, bigger bank, how things are changing. I feel that as Gaurav has summed up and as Rajesh Wadhwa has also pointed out, that basically it doesn't matter what financial institution is, what size it is. Basically, the disruption is there. It's going to happen, and it will be for every one of us. And I think more or less a kind of example that Gaurav has quoted, that there is a program launched by this bank called Goldman Sachs for Marcus, and then Onyx by JP Morgan. These kind of programs or initiatives kind of point out that big banks are here for making big changes, and smaller banks are following their tails. And I would say that fintechs are going to be here in the long run to bring the disruption to the forefront. So, thank you for the session, and it was a great discussion. Thank you, Gaurav, for being there with us for this fireside chat, and Rajesh Wadhwa for anchoring this chat.
Thank you.
Thank you,
Thanks so much for the
Rajesh. Thank you,
opportunity.
Vaishali, for the opportunity. Thanks a lot.
Thanks, Gaurav. Thanks, Vaishali. See you. Bye. Thanks, Gaurav. Thanks, Vaishali. See you. Bye.